Hello, I'm Brian Lucareli, Director of our Private Client Services Group and co-chair of our Family Offices team at Foley and Lardner. And today I'm here with Jordan Bergmann, Senior Counsel and a member of our tax practice. Welcome, Jordan.
Thanks, Brian. Thanks for having me today.
Absolutely. And today we're going to discuss qualified small business stock. But before we jump into the presentation, Jordan, would you mind sharing a little bit of your professional background with our audience, and then we'll get started with the program.
Absolutely. So Brian, like you said, I'm in our tax practice group here. I'm a senior counsel. I've been with Foley for 9 years now. A lot of my practice focuses on mergers and acquisitions, so tax structuring, those transactions to be very tax efficient, negotiating tax provisions in connection with those transactions. And one of the specialties that I have that plays well with that is a specialty in qualified small business stock, which is something that can help me be with the entire life cycle of a company, where they're first issuing their qualified small business stock, all the way to when they exit the company and are selling and trying to take advantage of the exception that we're going to talk about today.
Well, we clearly have the expert in hand. So, why don't we get started? And we'll start out with the first question here. And so let's very basic. So, what is qualified business stock, and what are the tax benefits does it provide?
Sure. So qualified small business stock, and a lot of times people just refer to it as QSBS, but it's stock that you purchase from a qualified small business that, if it meets certain requirements upon issuance, can qualify for a very beneficial tax break. A taxpayer who ultimately sells QSBS, if they meet all the requirements, can exclude an amount of income from that sale up to the greater of $10 million or 10 times your basis in that stock. And basis is like the cost to acquire that stock.
Okay.
Meaning, if a taxpayer sells QSBS for $10 million, they can receive that $10 million tax-free, assuming that they've met all these requirements. Now, this exception is a federal exception, but a number of states follow the exception as well. So you may be able to escape both federal tax and state tax if you qualify. The stock will generally qualify if you meet certain basic requirements that I'll go through right now, which is that the issuing corporation must be a C corporation, and that's a
Okay.
tax classification. The aggregate assets of that corporation at all times before you purchase your stock and immediately after you purchase your stock cannot be in excess of $50 million. So that's where the
Okay.
small business comes in. The corporation must be engaged in an active, qualified trade or business, which I'll address a little bit later. And the corporation can't have engaged in certain redemption transactions. So a redemption is where the corporation buys stock back from its shareholders, and there's
Okay.
certain rules that you need to make sure are properly navigated in that area. So these are the basic requirements for qualification. There can be more complicated requirements that would apply on a specific situation that we always need to check. But if you meet those basic requirements, and then the final one, which is big, you sell the stock after you've held it for 5 years, you might be able to take the advantage of this specific exemption.
Perfect. So, good segue into the next question. So, are there certain businesses that are best suited for this QSBS exemption?
Yes. So I mentioned that you need to be engaged in a qualified trade or business. So the QSBS exemption says that certain businesses are not going to qualify for this exception. So if the business you're looking to invest in is performing services in the fields of health, law, engineering, architecture, accounting, actuarial science, performing arts, consulting, athletics, financial services, brokerage services, banking, investing, farming, hotels, motels, and restaurants. There's a laundry list there, but they do not qualify. And kind
Okay.
of the common theme of all of those businesses is they're all service-focused businesses. So if you're looking to invest in a company and it's service-focused, and you want to get the QSBS exemption, you're going to want to look to see, okay, are they excluded from being a QSBS eligible business? So what this generally means that if you're looking to invest in a company that sells tangible products or even sells intangible products like software, most likely they're going to qualify and be a qualified trade or business. If they're in the service side of things, you need to look at it a little closer. It's possible they're not going to qualify. This is, though, just a general rule. And so whether a business qualifies is a very fact-specific analysis. For example, I mentioned one of the fields is health. And the IRS has looked at what exactly does that mean? And it's defined a bit more narrow than you might expect. So typically it's looked at as actually performing healthcare, whereas you could be a healthcare adjacent business, like maybe you make software for hospitals to use, and you might still qualify. So anytime you're looking at an investment, you really need to consult your tax professional to review and confirm whether that business might qualify for QSBS.
And I'm assuming and I'm going off script here a little bit, but I'm assuming all of these exemptions or what would not be included are part of the IRS regs.
Some of them are, but what actually you'll find if you really look into QSBS is there tends to be a lot of gray area in this. So we
Okay.
have some guidance on what these areas of business mean, but other times we have to either piece together other areas of tax law, or we look at, has the IRS made any rulings in this area, and are we similar to those rulings that they've made? So a lot of times, there is no express authority, and you're really relying on the judgment of your advisors to help you navigate this law.
Great. So last question. How can family offices take advantage of the QSBS exception?
So I think this is a great exception for family offices to focus on. One of the major benefits is it's not income based. So it's not based on what I, as the investor, make as income. It's based on the entity that I'm investing in and what is my exemption related to that entity. There are some limitations, though, that you need to think about. The exemption is only available for taxpayers that are not C corporations. So when you're thinking of your typical family and who's investing, in a family in the family office space, maybe the family office itself is a C corporation and might not be eligible to invest in these businesses, or at least take advantage of this when they invest. But all of the individuals from the family or the trusts can take advantage of investing directly into a qualified small business and getting this exemption. But Brian, as you know, a lot of our family offices, they don't invest directly at the individual or trust level. They pool their money or their investments into investment funds, which are typically taxed as partnerships for income tax purposes.
Right.
But thankfully, if structured correctly, you can have a family investment partnership that invests into one of these QSBS eligible corporations. And when it ultimately sells the stock, the gain that is then reported by the individuals or the trusts who own that partnership could
Right.
also be excluded under QSBS. You still have to structure it correctly, and you really should work with your tax professional to make sure that you have structured it correctly. But it's a great way for family investment partnerships to see another benefit in their investment strategy. I wouldn't let QSBS drive your investment strategy, but when you are looking at potential investments and you see one that could be QSBS eligible, it should certainly be a factor that weighs in favor of that investment when you're evaluating all of your options.
Well, Jordan, I certainly learned something today, and I hope our audience did too. I want to thank you for your time and certainly your insight today. And I want to thank all of you for watching our presentation. For more information, please visit us at Foley.com under Family Offices. Thank you.
Thanks, Brian.